Hey everyone! Welcome back to the Smart Finance Hub, your go-to source for smart money moves. Today, we're diving into a crucial topic: safe valuable assets to invest in when the dollar collapses. It's a scenario we all need to be prepared for. But don't worry, we've got you covered with some practical advice. You've probably heard whispers about the dollar stability, and we're here to equip you with the knowledge you need to protect your financial future. We're talking about real-world everyday investments you can count on when the going gets tough. So if you've ever wondered how to shield your wealth from economic storms, you're in the right place. We'll reveal the smart choices you can make. Ready to learn the secrets of safeguarding your wealth? Let's dive in right here on the Smart Finance Hub. Number 1. Land. First things first, why should you even consider land? Well, it's pretty simple. They're not making more of it. The world's population keeps growing, and guess what? They all need a place to live, work, and play. So investing in land makes sense. When the dollar's having a rough day, land tends to keep its value. It's like a financial anchor in stormy seas. Now, you might be thinking, okay, but isn't land super expensive? Well, it can be, but here's the deal. Like any investment, you've got to consider your long-term goals. Sure, it might need a more substantial upfront investment compared to other things, but the potential returns are worth it. Think of it as planting a seed that grows over time. But here's the catch. Land isn't like stocks or bonds you can sell in a snap. It's not that liquid. So if you need cash pronto, it might not be your best option. That's why it's crucial to diversify your investments, spreading your eggs in different financial baskets. Number 2. Real estate. Alright, let's start with the basics. Real estate. It's all about homes, apartments, land, stuff you can see and touch. When the dollar's having a tough time, real estate tends to stand strong. It holds its value, and here's why it's a winner. You know what's cool about real estate? Even when the economy's doing the moonwalk, your property is not. It's like a rock in the storm. So while your dollar might feel like it's losing its superpowers, real estate holds firm. But hold on, it's not just about playing defense. Real estate can be a good offense too. You can make some sweet money by renting it out or selling it when the market's right. It's like having a second income stream or savings account that's growing on its own. When the dollar's doing the limbo dance, real estate can be your sturdy umbrella. It holds its value, offers investment potential, and can be your financial safety net. Number 3. Foreign stocks and mutual funds. Alright, so you might be wondering, why consider foreign stocks and mutual funds? Well, it's all about diversity. In simple terms, it's like not putting all your eggs in one basket. When the dollar is shaky, having your money spread across the world can be a smart move. So how do you get started with this? It's easier than you might think. You can invest directly in foreign companies or opt for American Depository Receipts or ADRs. These are like a bridge between you and foreign stocks, traded right here in the US. It's a handy way to dip your toes into the international market. Foreign stocks and mutual funds offer some benefits. They can profit from favorable currency shifts, and they're like a buffer when the dollar isn't doing so hot. However, keep in mind that they can also be influenced by factors in the countries they're from. So it's not a bulletproof shield against economic instability. Number 4. Bitcoin and cryptocurrencies. You've probably heard about Bitcoin and other cryptocurrencies in the news or from friends. But what are they? Think of Bitcoin as digital money, like the dollars you use every day, but it's online. And cryptocurrencies are a bunch of different digital currencies, each with its unique features. So what makes these digital coins so appealing, especially when the dollar is acting all wobbly? Well, they're not tied to any bank or government, which means they can be a fantastic way to diversify your investments. Another exciting thing about Bitcoin and its buddies is the potential for growth. We've seen some incredible success stories with people making big bucks. But keep in mind, it's not all sunshine and rainbows. These cryptocurrencies can be a wild ride, with their prices going up and down like a roller coaster. When we talk about investing in cryptocurrencies, we need to mention the risks. The crypto market can be unpredictable. So, it's crucial to do your homework and most importantly, only invest what you can afford to lose. Number 5. Foreign currencies. The dollar can be as unpredictable as the weather. With all the talk about its stability, it's vital to be prepared. Foreign currencies are like the money you use when you travel. Think about the yen, euro, or even the Chinese yuan. When the dollar's having a bad day, these currencies can be your financial safety net. Diversifying your investments is like having a balanced meal. It's good for you. When you hold some foreign currencies, you spread your risk. So if the dollar value drops, your other currencies can step in and help you keep your money safe. But here's the catch. Foreign currencies aren't foolproof either. Just like you check the weather forecast, stay informed about what's happening in those countries. The value of those currencies can change based on economic and political factors. In a nutshell, foreign currencies are like a financial umbrella when the dollar's raining down. They're not a magic solution, but they're a smart move for financial well-being. Number 6. Collectibles. When traditional investments like stocks and bonds become shaky during economic turbulence, collectibles like art, vintage toys, or rare coins can be a smart move. The key here is scarcity. These items are often unique or in limited supply, and people are willing to pay a premium for them, no matter what the currency is. When the dollar's value declines, the demand for tangible, valuable assets often rises. Plus, collectibles have inherent tangible value. You can enjoy your art or vintage comics while they appreciate in value, unlike stocks or bonds that might just be numbers on a screen. Diversification is crucial in uncertain times. By adding collectibles to your investment portfolio, you spread your risk and can weather the storm if the dollar takes a hit. Number 7. Gold, silver, and precious metals. When the economy faces uncertainty, these shiny metals have always shown as safe havens. Gold, in particular, is like the ultimate safety net for your wealth. It doesn't corrode, it's in demand, and its value remains steady. Silver, it's like gold's underrated sibling. While it's often overlooked, it's incredibly versatile and can be a smart investment choice. Plus, it's more affordable, making it accessible to many. Precious metals provide a hedge against inflation. When the dollar weakens, these assets often gain in value, making them excellent long-term investments. So if you're worried about the dollar's fate, consider diversifying your portfolio with gold, silver, or other precious metals. And there you have it, folks. A breakdown of safe and valuable assets to consider when the dollar isn't playing nice. Just remember, there's no one-size-fits-all solution, and these investments come with their own sets of pros and cons. So make sure to do your homework and consult a financial advisor if needed. We hope you found this video as valuable as these investments. Remember, your financial future is in your hands and knowledge is power. So if you want to stay ahead of the game, Hit that like button if you've learned something new today. Don't forget to leave a comment sharing your thoughts or questions, and our team will be right there to help you out. And of course, the key to unlocking more financial wisdom is by subscribing to the Smart Finance Hub. So go ahead and hit that subscribe button and ring that notification bell so you never miss out on our latest insights. Stay smart, stay informed, and stay financially secure. Until next time.